Hello guys, welcome to the Trading Parrot. September tends to be a bearish month, but in this video we're gonna look into counter trading a potential entry into September for a long. You might be wondering, are you crazy? Are you gonna long September? Well, market makers tend to get us very confused and usually do the opposite. So in this video, we're gonna discuss some potential upside for September that we could really take advantage of. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And guys, apologies, yesterday I couldn't put out a video. I was traveling all day. I arrived quite late and exhausted, and I wasn't really able to watch any of the charts during the day. And now I'm putting this video early morning, so I would really appreciate if you could give us a like. The best thing that can happen to this channel is that if every single video that we make gets over 100 likes, that's really helping, so thanks so much for that. The first thing that I want to analyze is the CME gap that we have in here. We went for 61.6 and we were very close to take all the liquidity. Yes, it's true, it's a very small fraction that is left from 61.5 to 61.8, just $300. But when looking at the past performance of this strategy based on CME gaps, it's actually quite often that we lose partial liquidity, but then we come back later and take the remaining part. Of course, what we cannot guarantee is how soon we're gonna go and get this bit in here, but my current bias is that we will. I'm going to insist today on the returns of September in an equivalent year based on the halving event, and that will be 2020 and 2016. And as you can see, in 2020 we have a red month, in 2016 we have a green month. And what seems to be determining the performance of September is what happens in the previous 2 months. For example, in 2016 we have 2 red months prior to September, and then we get a green September. Whereas in 2020 we have quite a nice ride in July and August, and then in September was the time to have a break, get some red in preparation for what's usually quite bullish months in October, November, in December. If we took as a whole September, our bias should be bearish because pretty much all Septembers are red. But my preference is to focus on the equivalent year and only use the bearish bias as a second factor. If we focus on the DXY, we can see that we bounce on a level of support. I remind you, less than a week ago, we were touching that level of support, and I left this line telling you that into September, it was quite likely that we were still not gonna get the full breakdown below $100. And this small detail in this particular chart of the dollar index is pretty much determining everything that is happening right now. The dollar continuing to push into this level, it's what's keeping right now risk-on assets in a little bit of a cautious move. Looking at the monthly, today we're closing August, and if we were to close here, this will be the lowest close that we have had in the past 6 months. Yes, we wicked to the downside multiple times, but interestingly, we have never closed below 60K, and this could be that time. Now, keep a very close eye at the last final price action into the monthly close and be prepared to see some strange events right there. This could easily close back above 60, or it could dump into the close of the month. Usually around the beginning of a new month, we see some additional volatility. But wrapping up, if we were close right like where we are here at 59.2 or slightly lower on the 58, that will be quite bearish, and it will make very easy to understand that we might be on the verge of having a red September. In 2024, in July and August, we have a very small green and a red. So according to this analysis, we should be expecting a green September. But I think the argument of 2 green months getting a red one and then 2 red months getting a green one is not necessarily a very strong argument that you can use by itself. Ultimately, the DXY, how things are going with the elections, the monetary policy, whether we get in mid-September a large cut, a small cut, a delayed cut, all of those things are the last word when it comes to how good or how bad it could be September. And looking at the ETFs, you can see that after one of the 2 consecutive best days of inflows. We got 452 in total on the 23rd to the 26th. Right after that, we got 3 really bad days of outflows, 127, 105, and 71. Notice this still hasn't undone the 452 that we made prior to that. Currently, my bias and the position I'm looking to take, although I'm now on holidays, so I'm quite slow to trade and I'm looking to trade higher time frames for the next weeks. I will try to stay on top of things and keep you updated on Twitter, so make sure that you're following me. My handle is Trading Parrot. But as I was saying, my bias at the moment is to find a long trade. I'm looking for this price action here on the daily to potentially complete a double bottom formation. And why am I bullish into September? I'm not necessarily bullish for September, but I'm looking for a potential fake out. So many people are bearish in September, and you can see that from the actions of the ETF. The fear is starting to come, and the narrative of a bearish September becoming mainstream could potentially give us a nice move to the upside. Now, that nice move to the upside is going to surprise everybody if it plays out. It's going to leave people scratching their heads, thinking, what the hell are we doing above 63K? Weren't we supposed to have a bearish September? And if that plays out by having a breakout above 60.8 on the daily, we could grab that liquidity just above 63K that we never touched before from the fair value gaps that we left there. I will assume that at some point, if we get there, there should be some strong rejection just because it's September and many people are just waiting to take a short. Many are going to take the short from 59, from 58, thinking that this is just going to be a crash straight into 54. So I'll keep an eye if we break above 60.8 to consider a long. I wouldn't long right from here, and I'll show you the liquidity levels that we have below the price, because no matter that I am preparing for this potential long, the shorts might win in the short term, and we might not get that setup from here, but from lower prices, which is also fine. As long as we don't enter too early in a long and we get wrecked, we should still profit from it. You can see that the open interest has reset back into the low range of the last 6 months, which is quite healthy. Many people were calling here for a drop from almost 19 billion back down because we went too fast using too much leverage. There were very little spot positions, and you know, when people take positions with futures, they tend to end up closing them and taking early profits. Speaking of spot positions, let's look at what the big whales and the long-term holders are doing, because it's very interesting. A couple of days ago, we were touching the resistance at 181. That was an intra-candle move, meaning that by early that day, there were huge amounts of deposits indicating that they wanted to dump on us when we were at this top at 64.4. That ended up pushing the price lower, but there were also lots of withdrawals. That's why we are seeing that we ended up closing with the candle still below the MA. So good news, guys. That is positive in a way, because we are still below the trend line, respecting it, and we are still below the MA. So we have only 1 out of 3 steps left to turn into bullish from the point of view of the big whale explorer, which is to cross below the ratio of 1. When we do that, we have more withdrawals than deposits. Another thing that we need to monitor tomorrow is the close of this candle. Sunday close is extremely important. I would love to see the Sunday close right above 61.4, confirming that we have bounced from the same levels that before were resistance. Closing like this is bearish, and closing below these candles, meaning that we are putting a new low below 58K, is incredibly bearish, and it might indicate that the yellow path is quite broken, and we might go as well for a new test of the bottom of the megaphone pattern. And as I mentioned a couple of days ago in my last video, we were about to put a MACD bearish cross that ended up settling with a cross, but is below the zero line, which I wouldn't necessarily take as serious as a bearish cross from a high level above zero line. It's not nice to see it so early, but as I explained a few days ago, it can happen like here, that you get another bearish cross and then a bullish cross, and eventually you still go to the upside. There is quite some stress on the miners once again, and you can see how the hash ribbons is getting close to another cross, which is not necessarily nice. What you would expect from this indicator is after having a bullish cross like this one in August, even though there is a drawdown here in the price, the indicator should remain open and provide some decent returns. But as you can see in this area, when the price went down about a 15%, again, the hash ribbon looked like it was gonna do another bearish cross, but it didn't. So we should not necessarily expect that in September it needs to happen that we get another capitulation. We continue to monitor the RSI on the weekly, that if we were to close like this, it means that we are still not breaking out to the upside. But it's not as bad as if we were to put on the RSI here a new low. Notice that this level is higher than the one we have in late July and even higher than the one we had in early July. So potentially in September, we're going to do something like this, and maybe in October, we could be doing a crossover from those levels. Of course, if there's a lot of bearishness, we could fall in this way and eventually break out from lower. I just think that this whole structure in here with this channel down is just calling for a breakout. We just need to be patient. And yes, guys, the price is below the short-term holder realized price, which is not necessarily bullish, but you can see that multiple times in the bull market we've been below it. The reason most people think about this as a bearish event is if you focus on the performance from previous cycles, we tend to not spend more than a couple of days below it or just weak underneath on the bull market. But once it turns into resistance, it's officially a full bear market. And in this area here, we have spent probably more than we wouldn't want for a bull market. And that is keeping many investors a little bit stressed, I will say. I was going to mention the long-term holders, and as you can see, the line is still high. There are no new lows from long-term holders. They carry on accumulating. Sure, it's not as pronounced as these moves that we have early in August and late in July. It's kind of going for a couple of days sideways, but there's no substantial offloading of Bitcoin from them, which is great. I'm going to look into the liquidity. This is definitely going to complement the information I gave you earlier. Now I'm looking at the swing chart in tradingdifferent.com. This is a 4-hour chart, and as you can see, we have liquidity at 61.3 that we didn't take, and that is confirming what we saw of the CME gap. The CME gap made it to 61.1 in this chart. The other price we saw earlier is the CME price, which is different, and there is still this liquidity in here. We have liquidity at the 65, not a lot, just like in here, but when things start becoming really hot is when we get above 65.9 into the 67. That is the most substantial and larger chunk of liquidity. Below the price, yes, there is the 57 where we could fall if we don't end up completing my W pattern that actually breaks out from above 60.8. But at the moment that 58, it's been our support. If broken, we could take the 57 and maybe make that a spring into 61. Impossible to tell. That's why I wouldn't enter the long right from here. And if we were to make a very bearish move into the beginning of September, the most interesting level below the price currently is 54K. Notice that I'm intentionally not showing above 70 and below 50 because those levels, as you can see, relative to the liquidity that is right next to the price, is almost nothing. 46K is huge in liquidity to 47, and is that big that all the levels disappear if we include them in the chart, and the only ones that are left are 67K. Actually, if we get lucky with this double bottom formation and we made it all the way here and people get really bullish, we could take the 67 somewhere in September, and maybe from there there could be a rejection that takes us back down. Remember that when things are obviously bearish, the market maker tends to do the opposite to get people to get excited that things are not going to be bearish. And when people flip into bullish, that's when they change things once again. So we kind of have to have that psychology aspect also covered when we're looking at the charts, because it's very important. And here are the fair value gaps. You can see that we have these large ones. 59.9 has a very thin one, but if we go above 61.2, we could continue carry on up until 63.7. Below the price, we have the 56, and there's nothing up until 46.47, which is very interesting. And one of the reasons that we could flip bullish for the short term is because we are with the global longs and shorts on Binance currently at a level of 70. And if you remember from my past videos, every time we go above 70 and then we break down below that level, we have a nice move to the upside that can last very long, like in here, or slightly shorter into the top of the range. Multiple times we have seen that, and very rarely, if you stop the video, you're gonna find that, for example, this one was a fake out, but then after you get two more signals that will have DCA you very nicely into this last run towards the 70K. So I'm closely monitoring this, whether we go slightly higher in here and eventually we cross below 70, that could be a very nice buy signal as well. Guys, I'm currently hosting a position airdrop. You trade with $100 and Bybit gives you additional $500 to trade for free. Make sure you have a look at the top link in the description. You have to click on it to activate it and to see the instructions. You can also open an account using my referral link on Bybit and unlock up to 30,000 in rewards. And a friendly reminder that if you want to access my whole collection of over 100 different indicators that help you navigate the market and do backtesting and join my bot trading community on Discord, you can now get any of the Trading Parrot subscriptions with a massive discount. In the past week, we reduced the prices from 25% to 33%. And if that wasn't enough, now you can connect your Bybit account to our website and not pay anything to get these subscriptions. Make sure that you join my Discord server to learn more. I'll see you in the next one. Bye bye.